2%. Scott Bauer, CEO of Prosper Trading Academy, joins us now for more. Hi there, Scott. So what was driving the market today?
Well, just another day at the office, still very low volume. But what you had today, you had the market take the reactions and the speech from Lael Brainerd, the vice chairman of the Fed, in a positive light. She did come out and she said, yes, the Fed is going to reaffirm that they're going to keep raising rates. They're going to do what they need to do to combat inflation. But what she also said, which is really what the market took hold of, she noted that there is absolutely a risk of going too far. So I think traders looked at that. They really focused on that part of her speech today and looked at that and said, all right, the market's been a little oversold. This is probably as good of a time to buy and, look for a little bit of a rally. In addition to that, you also saw what happened to crude oil today. I mean, down 5%. You've got crude down now about $83 a barrel. We're talking that it's down about $50 a barrel or so. You're talking about 40% off its highs that we saw, a few months ago.
What do you think is to account for that? Because that's a pretty dramatic lowering of cost. And certainly it doesn't seem as if, when you think about why that's happening, it doesn't seem to add up.
Well, it's happening because of fears of a global recession and a global slowdown. So not just here in the United States, but across the world, in Europe, in Asia, many countries are already in a recession. I believe we're already in a recession. So the global slowdown is really crimping fears of that. And then you look at what's happening in China with another lockdown here, which slows demand. So that's really why you're seeing oil prices take it on the chin. But I don't expect them to go much lower from here. I know that's not going to be what people are going to want to hear, but I don't expect them to go much lower in the near term.
Mm-hmm. Let's turn to housing. The number of people applying for mortgages fell to its lowest level in 22 years. What are the potential economic ramifications for would-be home buyers who've been avoiding the market?
Well, I think in the short run, it's not going to change the dynamics of the marketplace too much. But, the problem is we're seeing mortgage rates now at the highest that they've been in quite some time here. We did get a little relief today in the bond market with rates coming down a little bit. But in terms of home buyers that have been on the sidelines, if you've waited this long, if you've gotten through the last 9 months, last 18 months maybe of these outrageous home prices and you've been sitting on the sidelines, my advice would be, if you have the patience, to wait a little bit longer, because I think you're going to get a combination of those home prices that have come down. But I really do think we're not going to see rates much higher from here, even with the Fed expected to raise in a couple weeks. I think mortgage rates, I'm not going to say they've hit their top, but I think they're peaking.
Well, that would be good news for a lot of people waiting.
Absolutely.
All right. Well, Scott Bauer, thank you so much for your insight. We appreciate it.
Thank you.